Hello traders, this is a weekly video about DAX and about US markets, and in this video that is recorded on Saturday, December the 1st, I will cover in first part of the video I will cover the day trading opportunities that we had on Friday, November the 30th, the last day in the November on the DAX, and then I will switch to the higher time frames charts and cover the situation on DAX and on the S&P. So this was the chart posted before the open for DAX with some updated and adjusted trading support and resistance zones. In my preparation I said that the daily bias is going to be neutral, and I emphasize the importance of this trading range with the main support at 260 to 285, and the main resistance for Friday was this 420 to 440. Let's go to the charts, to the smaller time frame charts, and see what kind of opportunities we had on Friday. So this from this line to the right is Friday, and basically same thing happened on Friday like on days before, that market started to go down immediately after the open, and these prior days we had a drop right from the pre-market, and again we had this kind of situation that on the open market just has poke above a pre-market high for a few points and then immediately turned down. So on Friday we didn't really had the textbook trading opportunity, which would be that the market test this zone and then failed. So this setup wasn't so easy to catch. You could catch that only if you are ready to risk here with your stop above the zone, or wait to see this break of the pre-market low and then as it goes to enter for short here with your stop above pre-market high, because if this is a breakdown then price shouldn't go really above pre-market high, and in this case if you're entering here it really doesn't have anything to do with the zone. As you can see, price didn't get to the zone, it stopped a few points below, the zone wasn't tested really. So this trade either going short here or here wasn't really a textbook short opportunity or something easy to be caught, and the logical exit would be at this main support zone, because you really didn't know in advance is it going to break or not. And note that every zone and every support and every resistance is support or resistance until it's broken, and it can be tested multiple times until it breaks, or it is going to be tested multiple times and then the market will reverse. And now let's observe this particular zone, which was tested many times before. So this is here Thursday, this is Wednesday, and this is Tuesday. So we have on Tuesday we have this test here, then here again, then here again. So 3 times on Tuesday. This is 3, this is 4, this is 5. Now we are on Wednesday. This is 6 on Thursday. This is 7 on Thursday. So we had 7 tests of this zone, and finally market is pushing through it. It is the 8th time. But nevertheless, this here at the end of the zone is your long entry. You could try along here, no matter is it the 8th time or this is the 5th time or this is the 10th time, because this is the main support, this is the support from the larger time frames, and you really don't know when it is going to crack. As you can see, it has provided 7 chances, 7 good opportunities for long trades. So even if you're lost once you had 7 chances to make a winner. I did that trade also. I have shown that on Twitter. My entry was here right on the 262 level, and then you observe this kind of movement here, because the trading idea was that it is going to be a false breakout, because bias for the day was neutral. So if you're entering here, then you're observing, because we had this gap from November 21st. It was obviously filled later, but at this time here, now the market is like here, you really don't know what is going to happen. And I said it before, if the market pierced a zone, especially larger time frame zone, just up to 20 points and reverse back, it is a big chance, a decent chance, that it is going to be a failed breakdown. And that was my thinking here. They touched the gap, this from November 21st, that filled it and got back inside. So a classic false breakdown should really look like this. Go for a small number of points, up to 20 points from the zone, and then reverse and continue, and really make a faster move to exit the zone and go higher. If that doesn't happen in some, not a long time, a short period of time, then it is something, that you should be worried about it, that maybe this isn't a false breakdown, that maybe this is a breakdown of the zone. And that here was enough time for me to, cut the trade. I had a 25-point loss, and I cut it for just 8-point loss. So this had a decent amount of time was here to save yourself if your entry was here at the back of the zone. If your entry was at the top of the zone, then it was a loser, full loser, and here it could be a small loser, or maybe even a break even if you got lucky to cut your trade. So after 7 good longs from this zone finally cracked, and after they filled a gap, you could see that they made really here a small range. Let's use some other color to emphasize, like this. And from there, because there is some room to the downside, you could attempt a short here with your stop above this range, because now the zone is broken. You don't even count on it anymore. Above the range, stop and look for a move to the next zone. And it did reach a next zone after a bit of chop, and there it was your entry for a long. The price just tested the top of the zone. So this isn't really some a big opportunity trade, because from this gap and bottom of this range to this zone you got only 34 points, and you would need to use around 25 points for this trade, so not a great risk reward, but nevertheless that was some kind of opportunity for you to go short here and exit above the zone for, let's say, 30 points, and then this was your entry on a touch of the zone here or here on this next test of the zone. So this was long entry opportunities, and later for these long opportunities here, the exit was right here when this smaller range is, and again testing of this support that was broken and now could act as resistance. So this here is your exit of this long trade. You're exiting near the zone. You could even attempt a short here, because now this was a support and now could act as a resistance. You could attempt a short here, but now seeing that, and you can see that a new range is established here. This is a new intraday range. Now price is testing that range. The top of the range is this gap which was filled. and the idea here is to not let, if you see the price that doesn't want to go inside this range, that we basically have a double bottom on a daily time frame, and then this doesn't want to go inside this range to cut the trade, to just grab a few points, or to protect yourself, to put a stop or break even, and to give this trade a chance, but it really didn't work. And the final short opportunity was very late in the day, when the price tested here the cash close, and you could also look for the fib retracement of this entire daily move, and to observe that it was almost in confluence with the 0.78 fib retracement. So basically, as far as the zones are concerned, the only textbook trades, zone-based textbook trade, would be this touching of this 190 and 210 zone. This was the only textbook trade. And if we observe this zone in the futures chart, we could see that there it is here. This is it. This is that exact zone on futures. And this is the reason why this zone is important, and why, as you can see, they just tested the top of the zone. Here it is. That was the long entry. And basically that was the best trade available for Friday, was to go long here. All of this, this was really price action based. Price didn't get to the zone. This was a zone-based trade that failed. That was, for me at least, a small loser. Then here, this was also a price-based, how should I say, price-based trade, breaking of this pullback to this small range. And so only textbook trade was really this, to go long here. On the higher time frames, we can observe this, that appears to be a false break of the higher on the zone of the higher time frames. This is here. And if you see, if you look the S&P chart, first they had a false break of this important zone, and on Friday we had a breakout. But also keep in mind that this breakout came really late in the session, and as you can see on the DAX, this up move was in the after hour. DAX in regular trading hours in fact finished here on 257. That was the close for the DAX. And you can observe that also on a daily chart. Let's look at the daily chart of DAX, and here is this upsloping trend line dating from September 2011. And as you can see, we have this 200 weekly moving average, and in 3 weeks we are closing below it. But DAX futures had this candle, this last candle of last week, as a green candle, but index, I'm sorry, not this, here, index has it as a red candle, because the close was here on regular trading hours, and then later they pushed the price up. So this move from here to here was in the after hour. And S&P also got his up move late in the session. And this move on the S&P and on DAX was a move in, hope that this deal about trade war and tariffs will be done. So next week is going to be the key for the directional bias, maybe for many weeks to come. Let's go back to the daily and weekly chart of DAX, and I have here also an ES A mini S&P futures chart to see that here this was this period when DAX and S&P really didn't correlate. So now is the question for fundamentally speaking, one can certainly argue that even with this deal done, that we still have economic slowdown all over the globe and all of that, but note that the markets can simply ignore. They can ignore economic slowdowns, and then they have done it before. So that is not a reason for us to skip a rally if one presents itself. So we should be ready. Everybody is expecting a rally, but we should be ready for both cases. And also note that the S&P, let's turn off the futures, that the S&P has really higher lows all year. This was this first correction in January, February lows, April lows, then we have this October lows. It really didn't make yet a lower low. So chart, when you look at this, I said it before that corrections usually have something like a double bottom. It usually ends like this. You have a double bottom, then a rally. Now we also have a double bottom and a rally. But now it's here we didn't really have to wait to any kind of big news to move the market. But now we are waiting, and now look at what the S&P is close right to the 200 daily moving average. If you look at the Russell, its moving average is quite above on Nasdaq also. So that means the S&P is really the strongest index currently on the US markets, and it made higher lows entire time. And it is different. The DAX is weaker than the S&P. And all that I'm saying right now is, no matter how this daily candle looks, how some of this candle looks, that we have really to be ready for any kind of scenario. Just to ignore the headlines and the stuff that is in the background, because the market can simply ignore fundamental difficulties and just continue to go up if the deal is made, no matter if the situation is remain the same on other aspects. And if they really don't make a deal, then that surely will be perceived as something bad, and the market is going to be disappointed, and then we can expect the market to make a lower low. So that is basically all for me for this video, and keep in mind that on Monday you will get another updated chart with adjusted zones for day trading. I wish you a good weekend and a good trading.